The next point will be a panel discussion, and it will be on Electronic Security Act, paving the way for a new financial infrastructure. And chair and moderator will be Alexander Wehnert. I welcome you from Börsenzeitung. Hello. So, stage is yours.
Bitcoin, we are short a speaker, I think, no? No? Actually, group's complete. So, yeah, why don't you take your places and then kick us off by introducing yourselves, Mr. Rosa. Why don't you make the start?
Perfect, yeah, thanks very much. So Jan Rosa, I'm a partner at EY, and I'm the European consulting lead for digital assets and digital currencies. And yeah, so we support multiple clients in Germany to issue electronic securities. So either on a centralized way on the D7 platform, but also as crypto securities. We have also been part of the first crypto security issuances in the German market. So happy to share my experience.
Yeah, thanks, Jan. Thomas Langbein, responsible for business development and sales at Blockchain Capital. Blockchain Capital, we are a fintech based in Frankfurt, providing, at the one hand, trading infrastructure solutions, but on the other hand, we are a data provider for digital asset market data that is accurate and reliable, which is not, I mean, a simple thing. On the one hand, we provide those data directly to, let's say, institutionals. On the other hand, we operate nodes in decentralized Oracle networks like Chainlink to provide data to the decentralized finance world, to smart contracts, basically. On the one hand, in our company's family, we also have Mikobo, providing the infrastructure for tokenized assets and also for a crypto registry, which is, I think, quite important in today's time, also taking in consideration the regulation we are just now discussing. And finally, we don't leave our clients alone. We also support them by, for example, implementing such infrastructure things by our block size advisory. Thanks a lot for having me here.
Yeah, so my name is Michael Dattlinger, CEO and co-founder of Cashlink. We are also a fintech based here in Frankfurt. We are a tokenization specialist, so we have tokenized more than 100 assets in Germany, and now we are basically an infrastructure provider as we have received a preliminary license for, according to the Crypto Securities Act, the Electronic Securities Act, and are now issuing, as I call it, regulated security tokens under the new eWpG law. And yeah, really happy to be here and talk about how regulation is pushing the space forward.
Good morning, everyone. My name is Enno Henke. I'm co-founder and CEO of Hardstocks, and we're the first company to manage to get equity as tokenization vehicle on the blockchain. We managed to get it fully prospected, so fully regulated, and afterwards made it tradable in a banking infrastructure. This isn't possible in Germany. This is the reason why we went to Liechtenstein with our small startup. They have the TVTG since 2020, and this allows us to tokenize every asset on the equity way, and this is what we're doing right now, and I'm happy to share these insights from Liechtenstein with you today.
Good morning, my name is Tobias Riedmüller. I'm a lawyer and an economist by training. I'm a partner at the Frankfurt office of GSK Stockmann, and we're focusing on digital finance platforms. So we're advising a number of players in the market in the legal structuring of various kinds of digital finance models, including crypto securities registrars. Thank you for having me.
Yeah, thank you all. And as we get to our topic, as many of you, most of you probably know, the law on electronic securities in Germany was passed in 2021. What are the decisive advantages that electronic securities bring along for issuers especially?
Yeah, so maybe I start. So I mean, first of all, I think the big advantage of the Electronic Securities Act is the dematerialization, which is something which was needed in Germany. It's known in other countries like France. They already have it for years. So, but when we look at the law, we need to look at the asset classes and then the way how we can actually issue these securities. So on the asset classes, at the moment we're talking about securities, so in Germany Inhaberschuldverschreibungen and fund shares. So, and also when we look at the operational benefits and who issues actually these type of assets, then it's a different scope. So because Inhaberschuldverschreibungen usually issued by, financial institutions, banks, to provide funding or liquidity, but of course fund shares are usually issued by depository banks on behalf of their asset managers. So on the Inhaberschuldverschreibung, on the security side, again we need to define whether it's a centralized registered security or whether it's a crypto security register, what Michael talked about. So on the centralized way, this is a use case mainly for people issuing in a lot of exchange-traded securities, specifically on structured note side. If you look at the D7 platform, which went live, so you can read every week how many issuance they've done. So you see that's mainly structured note provider, and they issue hundreds of notes every day. So for them, it's super efficient to have a fully electronical operations and process, and I think that's the hope, of course. So on the crypto security, it's still OTC market, so the amount of securities issued in the OTC market is not that much as on the structured note, for example. So, but still, the view is that in the future you have a fully electronical way of issuing securities, and I think that's the same for the fund shares. So that's the hope, at least. I think it's a way to go. So we need more standardization, but I guess we touch on that in the panel discussion.
Yeah, absolutely. Mr. Riedmüller, additional thoughts on the advantages?
Yeah, maybe some things to add there. So I think what's really also important is that through a crypto securities registry, you have a single source of truth, right? So in the traditional form of securities processing, settlement, you have a lot of players involved, you have a lot of instances, obstacles maybe, and you have a totally different timing. Where here, you can have one single source of truth that every participant can have access to, which means that securities can be transferred in a very more cost-efficient and also time-efficient way. And this also obviously reduces settlement risks. So in the traditional way, you have quite an amount of time between the order and the final settlement of that order, which brings the necessity to have capital underlying this counterparty risk. And this is also, I think, a very important aspect that we can, and an advantage of this technology.
But it's been a year since the law was passed, so what's missing in order for, we've seen some projects, but what's missing in order for electronic securities to really make their breakthrough, Mr. Duttlinger, if you would like?
Yeah, so what we're seeing is now that the whole market is building up, and so what we saw before on the security token space, we had a lot of issuances, but there was no market standard. And what's now happening with regulations, that we get clear rules, we get clear processes, and this is helping the whole market because now we're getting the standard and not everyone is making their own standard. And setting the standard set by the basic government or by the regulator really drives investment security, drives innovation. And what we're seeing is we're also issuing now these securities. It just needs more time because the traditional market, everything is basically working, everything is connected, and now we have to connect the players in a different way, in a more easy way, in a more cost-efficient way. This just takes a little bit of time. And also what will be another driver, that we are going to extend the law to stocks. So from Inhaberschuldverschreibung to stocks, so there will be more and more asset classes, and this will also drive the adoption.
Great. Mr. Langbein, any requirements that Mr. Duttlinger hasn't mentioned in order for electronic securities to make their breakthrough?
Yeah, absolutely. I totally agree to what Michael said. Maybe some addition. If we are looking at the market right now, what we can have there is, like you said, just mainly bonds, not stocks are still missing. But what we also need for especially institutional adoption is a liquid secondary market to really trade those securities. It's not enough just to be able to have an emission on the blockchain and a purely digital one. And you can sometimes sell it, but if you don't have a liquid secondary market, the price, matching is quite intransparent and sometimes leads to a high loss due to illiquidity in the market then. And finally, to build everything up and working properly, you also need, of course, the infrastructure providing those capabilities to be able to, from the emission up until trading, up to selling, bringing together all those market participants and making this a seamless stream, let's just say a workflow through the systems. That's, I think, also quite important and has to be built up now. And maybe the market movement right now gives us some time and the participants in the market to build just the technical basis for this.
Yeah, but I think it's an European regulation we need then. So if we wait until DLT pilot regime has passed and we have the regulation, it will take another, I don't know, 7, 5, 6 years, whatever. So therefore, I think I still believe that on the issuance side, it's still, I mean, we don't need to wait for the secondary, because if we wait, if all the regulation is fixed on the European level, it will take years, isn't it? So I mean, I think specifically on the OTC market, which is not on an exchange, so we hopefully still see adoption on the crypto securities. And then if we add the fund shares, and I think this is a big use case. So I always say we are a little bit missing the asset management side on here at the conference, but I mean that there's a big, I think it's a big use case for the depository banks also to issue on the crypto security register fund shares. I mean, and that drives also hopefully the adoption.
Yeah, I think, and I can add on the liquidity part. So I think we have several steps to liquidity, and one step which is already working with the crypto securities is of course market making. So yeah, Bankhaus Scheich, for example, is doing market making for eWpG securities. So that's where we already can have liquidity, depending on the asset classes.
Mr. Henke, as Mr. Rosem speaks about pan-European regulation, you went to a country, as you mentioned during your introduction, which is already further along in the process, Liechtenstein. Can you tell us a little bit more about the TVTG and what Liechtenstein did there in their regulation?
Of course I can. In the first place, I couldn't agree to my co-speakers more that we need liquidity, we need structuring, and we need the infrastructure to provide these assets. And I think the most important part when we try to break through with tokenized financial products is to bring it to the institutional market. And the institutional customer has just a lot of checkboxes we have to fulfill. For example, regulated market, liquidity secondary market, and so on. And we need to fulfill these checkboxes in the first place. And all the pieces of the puzzle are already there. For example, Liechtenstein allows us to bring a shareholder register of an equity company on the blockchain. So right now it's possible when I want to transfer my equity share to you, I don't need banks, I don't need notaries, I can just transfer it via the blockchain. It's confirmed and 24/7 tradable without any intermediary, 100% regulated. And also the pieces are there for a secondary market, for the infrastructure. We just have to put the pieces together to make a great financial product. And I think we can do it already. And this is the thing we're missing right now. And for example, also liquidity is a big part, but just a market maker, on the other hand, doesn't bring liquidity to a market. You have to try to concentrate and bring as many investors to this market, also institutional investors, and also try to find new solutions. For example, you can always work with liquidity pools, for example, to make illiquid products more liquid, even if there isn't a counterparty on the market. And so, as I said, we just have to put the pieces together to bring a holistic financial product off the market, and this is what we're missing right now, or missed.
And yet Liechtenstein is a much smaller market, so to what degree can it actually be a shining example for Germany?
I would say so. I mean, if you think about what they didn't just digitalize their registers, but they automized the registers. And I was in charge to talking to the authorities a few days ago, and they wanted me to fax something to them. And I was just, okay, I'm a 26-year-old guy, I never faxed something in my life, can I just send an email? So I would say there's quite a lot to do in Germany, that we not just bring our digital registers to the digital world, but to automize it without notaries, without intermediaries. And so there's quite a big step that the small country Liechtenstein with 38,000 inhibitors did there. And I think there are a lot of use cases we can use. For example, also Switzerland has very good blockchain technology and very good blockchain law. And we just have to see what they already did there. But for example, Liechtenstein is EWR, and we can passport these products through whole Europe. So what we're doing is that we use the Liechtenstein regulation, do a fully prospectus, and afterwards passport the prospectus to Germany, so that we pick our pieces in the puzzle and try to fit it together to do a holistic financial product.
Very interesting points, very interesting insights. But how do you rate the regulatory progress in Germany compared to other larger EU markets? Maybe Mr. Duttlinger.
Yeah, so I think we have done a great progress here because if you look at all the other restrictions, I mean, yeah, you have Liechtenstein and Switzerland. If you look at all the others, we are far ahead. So we have done a great job in Germany. We have now issuers coming from London, coming from France that want to issue in Germany because the regulation is clearer in Germany. So there we are basically attracting business to Germany. I think it's a competitive advantage to be in Germany now, as it's the first of the biggest economies to fully regulate tokenization. This is, there has been done a very good job in the finance department, we have to mention that a lot, I think, because usually people tend to criticize the government a lot, especially in Germany, and in this case, I think it's also time to say that we've done a very good job here, and then attracting business, which then leads to paying taxes more in Germany, which is benefiting basically every one of us, is very good.
Mr. Langbein, is that sustainable, this advantage that Mr. Duttlinger has described?
I would say yes, because I mean, we just discussed that we need institutional adoption in its space, right? To get the market running, to get a bigger market there, more liquidity and so on. And a regulatory framework, I mean, is really a solid basis for institutional investments, because what institutionals don't like typically is uncertainty about their investments and about risks that result out of the new technology and so on. So what I think regarding to your question is that we now have not only the basis for more investments and more attractiveness in an international context, but also have a good basis for the coming EU regulations, which we see in the market, which will be MiCA and which will be the pilot regime as well. So we are, I think, very good set from a German perspective for those coming regulation, which is then valid in more countries than just Germany.
Is that an accurate assessment? What's happening? Accurate assessment from your perspective, Mr. Henke?
I would say so, because we are already doing great progress in Germany. That's true. And you have to see that we're 80 million people and have way more laws to fulfill the process. For example, there isn't even a definition in the BGB for tokens or blockchain or something else. And we always have a cascade that we have to do it in the BGB first and afterwards can bring it down to our transaction and financial product law afterwards. So, for example, small countries as Switzerland and Liechtenstein are way more flexible to fulfill small things, but I would also say that an institutional investor, for example, and as I mentioned, I guess this is the missing part why tokenization didn't get through at the moment. And institutional investors would possibly more likely to invest in a German product than into a Liechtenstein product, for example, because the German market is already very credible and very trustworthy. And so we need to bring our legislation to the status of Switzerland and, for example, Liechtenstein, that we can step ahead in the process and be on the first mover advantage. I mean, we have a good registration right now, but we shouldn't get sleepy on it, and we should move forward.
Mr. Riedmüller, I just saw you nodding back there.
Yeah, sure. I totally agree to that assessment, sure.
We've heard a lot about infrastructure needing to grow in order for crypto adoption, the adoption of tokenized securities to really be successful. Which factors might positively contribute to more platforms for electronic security emissions and trading being established? Mr. Langbein.
Well, some of those points I think we just discussed. It's the regulatory, I would say, frame which is coming more and more clear for the investors. From the investors' perspective, this is quite important. But I think what is also important is to understand that by regulating this kind of market, we also create a lot of space for new players coming in. For example, you can be a crypto registrar. You don't have to be a bank for doing this. You just have to apply for the license, which can also be done by a fintech or startup, for example, but also, of course, by traditional financial players who would like to enlarge their business. and will foster also adoption of the digital securities market from my point of view. Becoming more and more players in there and getting their roles. Of course, there are other ones like the custody part to safely store the private keys and so on of those assets. So I think if we get more and more players in the market and who find their roles, then we will also get a more solid base for this digital security market in the future.
Yeah, I think it's the first time we see competition for Clearstream, isn't it? If we stay on the bond market side. And so I think therefore, I mean, competition is always good and will lead to more innovation. So therefore, I fully agree. On the registration side, we see competition now. And then, of course, if the DLT pilot regime gets through, I also agree we will see new marketplaces to appear, because then it's easier to set up a marketplace than it is today. So yeah, competition will lead to innovation.
Maybe I wouldn't say that more platforms and more players on the market will solve the problem, because we need credibility on the market. So the old players and the trustworthy institutes needs to grow into that space, because an institutional investor, for example, wants to work with clients that he knows for ages, for example, and they don't want to invest in like something they don't understand and something they don't know. And so we should just make it as something they don't understand, because they know the players on the market. For example, DZ Bank, for example, is going to the crypto space right now, and I guess we need a lot of more of these traditional players go into the market, because institutional investors are quite familiar with these types of investment and with these players. And I would say credibility and trustworthiness is enhanced with these players on the traditional market. And so the traditional big players on the market need to grow into that space. I wouldn't say that more platforms and more players would solve the problem. As we mentioned, for example, liquidity is quite a big topic, and just more platforms and more players wouldn't solve the problem of liquidity. They would make it worse. So we need to concentrate on good products, good platforms, and good infrastructure providers to get even the big boys in the game.
Yeah, and maybe I can add to what you have all said. More on a technical level, as we have now more competition, and this means more innovation. To unleash the full power of what we're now having is basically we can program our securities. And this means that if we have a widely used stablecoin, and then if we have digital identities on chain, combined with now a very good regulation, these three points will then lead to an even more, way more innovative system, way more new business models, because we can now automate a lot of things we cannot automate now. And this will be done by now more innovation in the market.
And I think to add to that, what's also important there is that the legal standards and the legal processes are developing in line with that. And we have a very good regulation which has set a foundation and a framework too, where this can develop in the process where business models are developing. So you have to detail all this out, the new standards for contracts, the new standards for processes, all those interfaces between the different players. But I think this is working out very well at the moment, and also the legislator and the supervisor are moderating this process in a very good way.
You mentioned the business model of central custody eroding, and what has probably added to that is the new regulation that was passed in June or introduced in June regarding crypto fund shares. So, Mr. Riedmüller, if I register my fund shares at my custodian, what are the risks that I really need to look into?
Well, the regulation provides now for fund shares to be registered with a crypto securities registrar in quite the same way as electronic securities bearer bonds. So the risks, I think, are no different from that, and also the efficiency gains are also comparable. I think the risk for the registrar that he has to manage are that he has to make sure that the register always records the legal situation in the right way, and that all the orders are processed in the correct time order. And this is, I think, especially a challenge, because this register is a very complicated thing from a legal perspective, from a civil law perspective. It's comparable to the land register in some ways because there are many kinds of different rights that can be recorded there and many kinds of participants to the register that can record rights in there, and the registry has to make sure that he has the right processes in order to do all that.
It's a liability question, isn't it? So I mean, as you were saying, I mean the guy or the institution running the register is liable for what's recorded in the system. So, and I think that's new. I think for some of the institutions, it's a new BaFin license, so it's new for the market. It's new for BaFin actually. So I mean, we went through some of the licensing processes. So I think BaFin also needs to learn what this is. What is a decentralized Aufzeichnungssystem and stuff like that. So I think it's still early. So, and I mean, Clearstream is in the market for, I don't know, lots of years. So I mean, these guys, they just have a preliminary license. They're going through the licensing process. I think there's more to come, and then processes will become more robust. And also, if you look at the use cases which have been currently done in the market, it's simple bonds, zero bonds, or we were missing corporate actions, so some of the processes are not clear yet. And I think what Michael was mentioning, which I think is the big thing in this regulation, it's aiming for interoperability between the registers, and that means we need standardization. So that's actually the first time, so that we see this in the law, that the law is basically forcing the registers to come together and agree on a standard, and that's, I think, is also a good thing.
So a lot of progress, a lot yet to do. Gentlemen, thank you all. I think that's our time. Thanks all of you for your attention, and yeah, we're looking forward to the next panel discussions, and yeah, thanks a lot.
Thank you. Thank you.
Thank you.